So we heard from President Trump yesterday. He went on Fox News, and he was emphatic that it wasn't the trade war with China, it was in fact the Fed. Listen to what he said.
The trade war with China, we're taking in billions of dollars in tariffs from China, from Chinese goods, and it hasn't hurt us at all. We're taking in billions and billions of dollars. We're going to make product here that we're now buying in China. No, that wasn't it. The problem that I have is with the Fed. The Fed is going wild. I mean, I don't know what their problem is, but they're raising interest rates, and it's ridiculous.
So, Senator Portman, is he right?
Well, first of all, nobody knows, right? But second, I think it's a combination of factors. I think with regard to the Fed, certainly there's a concern about higher interest rates, but that's been true really for the past few months. Second, I think there's a rebalancing going on here. The Dow, as an example, was at, I think, about 26.3, near record levels. So we've seen the markets go up and up, and there's been a concern that, you know, you're maybe a little overheated. So I think there was some of that. I also think that the tech stocks took a particular hit, and probably there's a little concern in the tech community, again, some overheating. And then finally trade, just uncertainty. Although interestingly, on trade, you would think there'd be a little more certainty with the so-called USMCA, the new NAFTA 2.0 having been concluded, and really an alliance now between the Europeans, us, Japan, and now Mexico and Canada vis-a-vis China. In other words, more of a unity trying to deal with some of the structural deficiencies in the Chinese trade relationship.
Yeah, and to your point, the president also yesterday said that he thought it was a healthy correction. To your very point that maybe it was a little overheated, there has to be a healthy correction. Talk about that trade issue, because we hear from a lot of companies, individual like PPG has really taken a hit this week, basically because of China problems. We hear individual companies who are really hit, but as you point out, we actually have a truce with some of these countries now.
Yeah, I think we've made some real progress in the last week or so in terms of trade, and it's really, again, trying to ensure that the rest of the world that is a free market-based economy is with us with regard to our concerns about China and specifically the theft of intellectual property. But there are broader concerns, structural concerns about the Chinese approach to subsidization, to selling it below cost. And you saw at the General Assembly, again, this all happened just in the last couple of weeks, countries across the board, the EU, as I mentioned, Japan, us, the biggest economies, saying, you know, we need to work together to ensure that we get China playing by the rules. It's important to have a good relationship with China, not just a good trading relationship, but for geopolitical reasons. But we need to be sure that we are looking for a more level playing field, not just on how much they buy in terms of soybeans or LNG or other things, but in terms of some of these structural deficiencies. And if you look at the 301 petition, this is the U.S. approach to China is not based on national security 232 as it is with steel and aluminum as an example. It's based on unfair trade. And the unfair trade petition, the 301, talks about these structural changes very specifically. So I think we now have a better situation in a sense because China knows what we're looking for.
Yeah, and Senator Portman, as you suggest, it's not just the United States, Europe and Canada and Mexico. Everyone's concerned with China and how they handle intellectual property. At the same time, it looks like this isn't going to get resolved anytime soon with China. It may go a longer time. So, does that mean that
I think you're right.
should we all be prepared for an extended tension with China for good and sufficient reason, but that could really affect businesses, it could affect markets, and maybe the president should be warning us about that. It's coming down the pike, it's worth doing, it's the right thing to do, but it's not going to be all easy.
Well, I think you're right. I think it's going to take some time, and having negotiated with the Chinese on various issues when I was U.S. trade rep, patience is required and some time. I think we can get to the right place because we've now laid out our objectives more clearly, and I hope the administration continues to communicate clearly on it. I think for a while it was confusing for China because some of the administration was saying just buy more of our stuff and therefore try to change the balance of trade because we do have a huge trade deficit with China. But that really is not what this is about. It is about ultimately them having a more level playing field on the balance of trade, but it's really about these structural changes, the licensing agreements that are required, the joint venture agreements that are required, the intellectual property theft in other ways, the cyber attacks. So those issues have to be resolved, and I think that's going to take a little time, and we have to be prepared for that.
And Senator, we have a question coming from a viewer actually who asks whether you believe in an independent Fed, which leads to a question about the Fed. The president obviously has a point of view on this. Should he be expressing that point of view? Is that healthy? But even if he should be expressing it, is he right? Because if the economy is going so well, doesn't it make sense for the Fed to be raising rates?
Well, it's a great question. First of all, independence of the Fed is absolutely necessary because this is how our system is going to work most effectively. You don't want to have political pressure on the Fed. Second, to the president's point about the economy, the fundamentals are really strong right now. When I'm back home in Ohio, the biggest issue I'm hearing is workers. You know, how do you get enough people in the workforce to help with a growing economy and more investment, lower unemployment, higher wages? I mean, all the right things are happening right now. So I do think you have a situation where the Fed can create a little space so that when there is a recession, which will happen at some point, and I don't think it's happening soon. I think the economy actually is on a good trajectory right now. But you need to have a little monetary space there to be able to deal with it. So I think, you know, what's happening right now with the market, it's going to go up and down based on various reasons. Interest rates may be part of it. China may be part of it. Oh, neither of those is new. I think the tech issue may be a little bit bigger factor. But the point is the fundamentals are strong.